Once considered as the most lucrative and safe sector, now that has put its employees in a soup by announcing mass layoffs. Now, global US tech companies like Amazon, Apple, Twitter, Meta, and even Indian companies like Byju's, Ola, you name it, and all the big companies are handing over the pink slip to their employees. Now, if you have been a victim of one such layoffs and are burdened with the financial obligations, then do not worry, we have your back. Now, today onto the show, we'll speak with Mr. Harsh Rungta, who is the founder of Fee Only Investment Advisors, and also being joined by Mr. Maninder Kapoor Puri, who is the Group Chief Human Resource. And we welcome you, both of the gentlemen, on board, and that's a very interesting conversation that is lined up. And Maninder, the reality is harsh, and that is on the face of it is that there are layoffs being happening. But let me just set the stage for our viewers to understand why major IT companies are undertaking the layoffs, what are the key reasons, and overall, are the companies now delaying or cancelling the campus hiring?
Sure. So why is it that, companies are looking at layoffs and because I think we all know there has been a little bit of volatility in the market, right? Stock markets have got impacted. There is a socio-economic issues that is going on with various elections, the political issues that's going on. In terms of even the over hiring that was done during the last 1 year when the IT market was in the boom. I think suddenly people have realized that we've overhired and we've got too much staff. There was a fear of losing talent. I think that has been another area. Then, of course, there is this huge thing about there's going to be a recession that is going to hit, right? And that also is causing a little bit of a butterflies in the system, saying that what should we do? Should we be looking at layoffs? And that's why I think most companies are reacting like that, where they are looking to either lay off or trying to figure out what else can they do. And it's unfortunate that we always companies look at layoffs as the biggest, because that is the biggest cost to IT companies, and that becomes the first action that any organization takes. In terms of are they canceling campus hiring, one is hearing, yes. Delaying, I've heard about, even there are organizations that have cancelled they've rejected or reneged the offers. That, I think, it's in the news. I will not name the organizations. It's all over the news, which is happening, which to my mind is actually in a way axing your foot, because personally, as an organization, we don't believe that campus hiring should be where you should be really hitting, because this is when you build your base, you start to train people and start to build your organization in the right manner. But yes, that is happening, and it is all because of this looming recession that everybody's talking about, the year 2008 coming back into play. I think so, and that's why one hears about layoffs.
Well, yes, layoffs are happening right now, and going forward, the outlook is not that rosy. But Harsh, very good evening to you. And the discussion is all about how to manage if you are a victim of one such layoff. So my question is, how do you actually deal with the layoff financially? If one has, and or if one doesn't have an emergency fund, what should be the strategy in both the cases?
So ideally, you should have started planning for a layoff much before you get laid off. You don't really dig a well when you are thirsty, and that's where the emergency fund or the contingency fund comes in, which all planners will, actually plan for you. So if you have the emergency fund, obviously use it. It's meant to be used in the case of a loss of job. But the other thing you do when the loss of job is that you cut out as much of the non-essential expenditure as you can, and pay the rest from the emergency fund, even as you start looking for another job. Now, if you don't have an emergency fund, and unfortunately that is the situation with a lot of people who don't really plan, and who put all their money aside in, into investments that will maximize their returns. Uh, I think for them, this should be a wake up call that while dealing with this next time when they have a job, they should make sure that they create this contingency fund, but that's for the future. Immediately, I think you can create a temporary emergency fund by essentially taking a loan against your investment, secured loans against your investments. I mean, typically the life insurance policies that might have surrender values, your shares, your units, your bonds, maybe even your jewelry. Now, these are not things that you might want to sell immediately because you might get a job uh, in 1 month, 2 months, 3 months. So therefore, it is easy to get a loan against such kind of assets. They don't come with, they come very reasonably priced. Try and get those loans without too much upfront cost because hopefully you will get a job and be able to pay off the loan quickly. So without too much upfront cost and definitely not with a prepayment cost. So I think take that kind of a secured loan and use that as an you know temporary emergency fund. And as you go, so you take a higher limit. Let's say your monthly expenditure is 1 lakh, and you have enough investments. Take a 3 lakh limit, so that you utilize only one lakh as and when the expenditure arises. Of course, goes without saying, try and reduce the expenditure as much as possible during this period. But at some point when it becomes clear that you're not probably going to get another job quickly, or the situation is just too uncertain, then maybe you should sell off those investments instead of retaining them, so that you don't have an unnecessary interest burden. So for a temporary period, at least for till you find your breath back, create this temporary emergency fund from a loan. And if that period looks like getting elongated, sell off investments and pay off that loan, and meet your further expenditure by selling investments in that case.
Well, Harsh, that was a very detailed answer. That what factors that you should be looking at. Firstly, it could be a wake-up call where you need to create an emergency fund, if not done yet. And going forward, one good option will be taking a secured loan for yourself to take care of all your monthly expenses. But Maninder, now coming to you, just to understand, like, what exactly is our company looking at to decide which employees need to be handed that pink slip, and which segment is getting targeted right now? When it comes to the Indian markets, we are seeing that so many layoffs happening, and especially in that startup world, it has now started. Which segment is getting targeted, and what are the parameters that the companies are looking at to decide which employee is to be said goodbye?
Yeah, look at good questions. So there are two, three things, when you look at sectors, which sections or sectors, I think IT startups, you do see a little bit of a pushback in terms of asking for layoffs. In terms of which kind of people, it's always, last in, first out, LIFO is something that most organization would use. Uh, that being said, you would also look at people who are not necessarily upskilling themselves. I think that is why if employees, wherever you are, if you're not on a, especially in the IT world, because the technology world is changing so rapidly and so massively, that you have to keep yourself relevant to have a job. So people who are not learning, people who are not ready to work, who have issues with attitude, do not work as a team player, are people who will always get impacted. Now, yes, if you're working in a project and the project is going through a change, this is a client, that particular project will be looked at, and you'll always pick up the non-performers, or people who are not performing to the mark that everybody else is. You will not let go of your high skill talent ever, because you know that it's tough to rehire and train the talent. So the best way even for anybody to save their jobs would be to continue to learn. And if somebody has had done that in the last year and a half, they would most probably be able to save their jobs. Now, in terms of what do they look at, that is, of course, non-performers in terms of your skill match, maybe projects, sometimes your inability to be flexible when the organization demands, uh, how much of knowledge are you, displaying your soft skills. There's so many things that an organization would look at before even having that conversation with you. Mostly in the IT world, you will allow them on a couple of projects. People do look at give you a chance in first and the second and so on and so forth. It's just that the tolerance level has come down compared to what you would have done in a regular scenario.
But Maninder, you did touch upon the IT sector. So one trend that was visible in the whole IT sector was that the attritions were quite very high. People were actually switching jobs and even at a very higher salary. But now is the trend suggesting that those higher salaries and the perks that were being enjoyed by all these IT employees is now showing some signs of taking a breather, or the good times for all these IT employees is somewhat over for now and now they should be sticking to their jobs? And also an additional question to this is that are these employees which have recently switched from one organization to another are more at the verge of getting that pink slip, or is the trend showing that these employees are the ones that are being handed that pink slip?
Yeah. So you're right. I think last year it's been a maddening world for the IT companies. It was a mad rush for talent. People were literally, it was a war, right? We were paying 150%, 200% salaries to hire talent. Now we've come to a point where, yes, suddenly your wage bill has gone up extensively. And one is wondering that, have we gone and overhired? And most companies have, assuming, that this trend is going to continue. So let's overhire. And yes, you're right. These are the people, and like I said, these are the ones who have last joined. And yes, they will have an impact. Not all, but yes, if they are not somebody who have really built or walked the talk in terms of when they were selling themselves to the organizations with the right skills, then they are the ones who will be looked at because they're high cost employees. See, layoffs are happening because of cost, and hence you will look at high cost employees, and those are the ones who will be probably uh, given a pink slip in terms of if they're not necessarily making the cut. And when they move to projects, and like I said, if they've come with in a project, if you have 10% of these employees who are overtly paid, they will be the ones who will be looked at again to be axed. And yeah, but one is that. Second is what I said earlier. People are, organizations are also looking at the campus or the new hires, the graduates or somebody who've just walked in from college. And that is where it's hard hitting because they don't have purpose that Harsh was talking about. And they are the ones who will probably hurt the most because they don't have any bank balances to take care of course, unless their families to back them up. So I think they will be the ones who get impacted the most in terms of their mental well-being and financial well-being. And in terms of how when companies are asking them to go, these 10%, 20%, whatever the numbers that organizations are taking as a target, it will be the last ones who have come in, not necessarily your tenured employees. So yes, it's best to stick around right now. Do not change jobs unless you have absolute confidence that what you're needed, you're required, and you will have your job. And at least make sure that anybody who's moving, negotiate for a good notice period so that if you are laid off, you have time to look for another job.
Well, yes, Maninder, tides have actually turned quite very fast, especially when it comes to the IT sector. But Harsh, now coming to you, you did touch upon, and one of the suggestions was that why not go for a secured loan? Now, what should one do if one has a loan EMI to pay, and can he actually speak to the banks and request for the extension? Is that a good option to go with?
So, two things. One, I think as far as possible, okay, and for as long as possible, you must try and ensure that you pay your installments in time so that, and most of the people being laid off are young people, so they will be borrowing in the future. So it is very important for them to maintain their credit history. So, create, either use your emergency fund or create one, to make sure that at least the first installment that falls due after you get laid off is paid on time. Now comes the question of what to do if this thing gets elongated, as it is likely to be. In that case, fortunately for India, we've never had a situation of mass layoffs, except for a bit in say late 2008, early 2009, the uh, global financial crisis when that happened. That was the only time when we saw a wave of layoffs, and I hope to God that we don't really have that kind of layoffs. Anyway, the flip side to that is that there is no standard processes in the bank to address requests like this coming in. And that's a good thing because we have not had layoffs. But the issue is that now when you approach, the bank may not be able to react to you immediately because it is done case on case, case by case basis. So it can be done if you have had a good payment track record, but otherwise, as I said, for as long as possible, and as much as possible, if you have decent prospects of getting a job in the near future, try creating a emergency corpus by taking secured loans and making sure that you pay off your loan installments. If ultimately that ceases, then pay off, redeem the investments, but still make sure that you pay off the loan installments on time. Worst comes to worst, think of selling the assets on which those loans have been taken. So if it's a home loan and it's been 6 months and you have somehow carried it through, maybe it's time for you to think whether you should actually sell that home. Make sure that you don't default. I think all options should be on the table when you are looking at an situation like this. But all options will remain on the table provided you don't default. So I think the importance of not defaulting is extremely important.
Okay. I absolutely take your point that liquidating your assets is one such option that you can be taking off, and especially those assets which is being heavy on your monthly budget when you are in trouble, handed that pink slip. But with this, it's a wrap to this discussion. Would like to thank Maninder as well as Harsh for joining us today on ET Now with that insightful conversation on if you are being handed a pink slip, what should be your strategy and what are the factors that the company is currently looking at handing those pink slips, and what should you be wary of that to take care of all those concerns.